I hope you're doing well and happy new year to you. Thanks for being here. I want to wish you and your friends and your family all the very best for 2021, a healthy, happy, and very prosperous year ahead, we hope for you. Look, it's been six weeks since the last video and a lot has changed. Bitcoin has doubled. We're well on the way to that prosperous 2021 that we've been looking at now for more than 2 years since the last video. Well, the first video was released back in December of 2018 when it just looked so bad for Bitcoin after a more than a year of a bear market, an 85% decline. There were a lot of people that had just basically given up on this, had lost a lot of money. And the first 4 year cycle video was all about rebirth, was all about raising and coming out of the ashes. And the cyclical nature of these cycles is simply that, from a summer to a winter and back to a summer through the spring and the fall seasons. Everything has its phases. And at that point in 2018, December, the first video was all about just highlighting the fact that cyclically we were at a bottom or very near a bottom, and that was time for action. If you had still believed in Bitcoin and believed in its future and its possibility, where it stood presented you with an amazing possibility or potential if you took advantage. And for those that did, whether it was then or soon after, or even over the last few months, you're still sitting in a very, very good position, obviously. And the whole goal of this video series was not so much to say that buy Bitcoin now and hold it later on. It was all about what it takes to be able to get through that process, to identify where we are in the cycle, what the potential is for Bitcoin in the future, and what that might mean for you, and some of the challenges that you will face getting to that point and getting to where we are today, to be able to eventually realize that opportunity that Bitcoin is providing us. And here we are today, just shy of $40,000, earlier than what I had expected. In previous models that I've shown, and they're just being guides, I did not look for Bitcoin to really get through that all-time $20,000 level, and not until March or April of this year. So we're already 4 or 5 months ahead of what many people thought was far too optimistic in my cycle initial theory. And here we are, though. We're at 40,000. It doesn't look like it wants to give up yet. It's relentless. And I'm hoping, if anything, these videos have given you the tools or the ammunition and put your head in the right space to be able to appreciate where we are, hold that position, possibly take a little bit off, and be able to sustain the move and ride this cycle to the eventual highs that I think are going to be much higher than this place, and come out of this having been rewarded for that effort. So that's what I wanted to introduce you to today. I have received many questions over the last few months, and I've listed here on the screen the ones that were most frequent and most liked, and I think they cover the gambit of what people wanted to hear. And I will try and elaborate on each of these. This may end up being a long video. I'm going to speak very freely and just openly. None of it's sort of scripted. Just whatever comes to mind, I'm just going to just present it to you. And I'm hoping, again, like all previous videos, that it resonates and there is some value in this. Again, this is only one man's experience, one man's views. My views are often wrong in trading and investing. Nobody is anywhere near close to being right the majority of the time or all the time. So that's the case for me. And the goal is to realize maybe when you're wrong and things aren't working out, and to have a plan for that. And I think that's where the model portfolio tries to accommodate being wrong, because being wrong is part of trading and investing. And that also applies to something like Bitcoin and this long-term idea. I know many people are so convinced, 100% convinced, that there is only one way that Bitcoin will resolve itself. And maybe to some extent, I think they'll be right, but it doesn't mean let them run any risks. So again, the whole point of this is to be able to cover the spectrum of possibilities and have at least some form of a plan for that spectrum of possibilities. So here we are now, we're looking at these questions. Of course, like I do in all the videos, I will start off of where we are on the charts. I'll go over the charts, try and make some sense of what's going on. And then I'll just get into these questions. And they're all pretty much related to either the portfolio, buying, selling, the pump that we're seeing right now, and then just some advice in general on how to take advantage of this as well. So I'll cover all of these questions. I'll go back and forth. So let's get into it. The first chart I want to show is the monthly, essentially capturing the entire evolution of Bitcoin, going back to when it first really appeared on exchanges and hit that $1 mark. That's where I marked the beginning of the first 4-year cycle from a trading or price standpoint. This is where real price discovery began. There was some decent liquidity. That's the beginning of the 4-year cycle. And if you recall from the first video, the main thesis for this is that Bitcoin is gaining momentum, the network is expanding at a rapid pace, and adoption of Bitcoin as a store of value has only increased. And as the network increases and more people believe it is a true store of value, then there's going to be more trust in that network. The more trust that develops, the more capital that flows into it, and people then trust the network enough where they say, I would prefer to hold some value in Bitcoin versus US dollar, euro, gold, or any other asset class like a bond or a treasury, for example. So it becomes a conscious decision as the network grows to allocate your capital to certain asset classes, and it's all about trust. And as we go on here, the more trust that develops, the more value we'll see. And this is exactly what we're seeing right now with the current wave. I talked about this wave being an institutional wave last year in many of the videos. This was more of a retail phenomena. This first cycle here was more of the really smart VC money, Silicon Valley money, that type of thing that pushes higher. This was the retail ICO phase. And now with the right platforms in place and some of the regulatory that's in place, we now have the onboarding of larger volume capital from the institutional space that's driving this higher. What I've always said, however, is that if you believe in the properties of Bitcoin and you believe the network is growing, and it's only really about time, and time equals trust, trust equals value. This is what it's been about. As time goes on and each block is mined in the chain, and with each block the network availability remains as is, and the security of one's value is then reinforced, what you end up having is more value it comes into the network. But overall, as I've always said, even though you have massive swings and gyrations, overall the trend here is a secular trend. It's a trend that just goes higher over time, right? Over time, it's pretty consistent. It comes back to a mean, it goes below a mean, but overall, it is consistent here on this log chart. And I think there's no reason why, for now at least, at a market cap of still only, 550, 600 billion, there is no reason why that needs to end in a near term future. It's still only a fraction of what the gold market cap is at, and obviously a very tiny fraction of total assets in the financial system as a whole. So it still is, even at this $40,000 level, or close to 40,000, it still is a relatively insignificant asset class. And that's good. That's good for early adopters like us, because there is still a lot of upside left in unlocking that value. And by having our position, we will then realize a lot of that value over time. So the chart is, again, self-explanatory. It's the same chart I've shown you in almost every single video. And I think there isn't any doubt now that we have a right translated 4-year cycle that's in play. We've been talking about this and waiting for this, but we are now a month 25 of this 4-year cycle here. Only just hit the midway point of the cycle. So if you look at month 24 here, which was last month in December being the 2-year anniversary of the bear market lows, and then you go out to the next 2 years, so the next 4-year cycle expected low, not from a price standpoint, that's just arbitrary, just from a time standpoint, we're at the midpoint here. So we've always expected the top in this 4-year cycle marked from December 2018 to somewhere around the end of 2022. We've always thought the top should come in the second half of that cycle. So obviously, if you look at this being the midway point, somewhere in this area, again, it's arbitrary. The last time it occurred almost exactly on the 3-year mark. If that's the case, we're talking about December 2021. But that's very fluid in any cycle. It doesn't have to occur right there. A similar point right here was around the 3-year mark, but it's possible that it comes earlier, like October. It's also possible it comes later. There's no way of really knowing. What's important is that we've made a new high. So we have a very clear secular uptrend here with the 4-year cycles now rising. But now we have now we have a third top. Regardless of where this cycle tops, we're going to have a higher high again. And that's the definition of a long-term secular uptrend. It's also the reason why on the 16-year time frame, a 16-year cycle, that we now have this secular trend. So we've got 1, 2, 3, and I believe we will make another high in the 4th cycle that follows this. But I think that one has the chance, a very significant chance, of topping very early in that cycle and then spending more like 3 years in a declining phase. Doesn't have to be significant from a price perspective. What's more important is from a time perspective that it does retrace and consolidate. So looking at maybe 1 year off from the next 4-year cycle low to a peak forming left translated. If you look again from a date standpoint, from the expected cycle low out 48 months to the next expected cycle low, which would be in December 2026, and you draw the midpoint there, just like we did right here. So there's the midpoint roughly. In this next cycle here to follow, we'll be looking for a left translated top. So a top that occurs in the first half of the cycle, possibly 1 year in, one top that should likely exceed the high from this current 4-year cycle, and then spend 3 years either mostly consolidating. I don't expect a massive decline, but certainly a decline down into this 4-year cycle low that could be anywhere up at this point. And then we begin yet another 16-year cycle that follows. But that's getting really far ahead of ourselves right now. We need to execute on this 4-year cycle. A lot of people love talking about what's going to happen in 2026, 28, and on, how Bitcoin's going to be worth 1 million, 2 million, and 3 million. And that's great. And we hope to be there, and we will be there when that time comes. But the goal of this here is not just to hodl. I could have said from the beginning, just hodl, guys. By the end of the next decade, Bitcoin's going to be $3 million a coin. Just wait for that. I mean, that's true, right? I mean, people are doing that. People are just hodling for whenever, for the future, for the time when Bitcoin becomes a reserve currency. But this series of videos is not about that. My goal is to increase the amount of Bitcoin that I hold through the 4-year cycle. So by selling as close as possible or as much as possible near the highs of the 4-year cycle, and accumulating as much as possible at the next bottom as well. And this is the goal of the videos that we have here. So overall, everything here looks to be going to plan. If anything, it is going and it is ahead of plan. We are now clearly or comfortably above the prior highs from 2017, and we're just at the halfway mark of this 4-year cycle. all looking good. We are starting to see some separation now between the price and 10-month moving average, suggesting here that it's getting a little too speculative, a little frothy is maybe what you can call it. And that's true. And generally, when you see separation like this in the price, you begin to think that we're in the final stretch of the 4-year cycle blow off. Just like you saw here, as it really started to separate, you started seeing that final push. Still plenty of room load left in this. Typically, even when you see this separation here, there was another 4 or 5 months to go from there. So there is still plenty of room left if this is the final blow off heading to an early top in the cycle. Then we're still looking at those price targets I've always talked about, the 100 plus, 150, 200, maybe even as high as 250,000 are all in play if this is an early start to the blow off move. I don't think that's the case, and I'm going to cover a couple of scenarios very shortly. But that is one thing we need to just be aware of, and we're prepared for that, as you know. Looking at it from a weekly, here it is right here. So we're starting to get, the rate of change here in this move is really starting to accelerate here, suggesting that we're heading up towards some type of at least short-term top. We haven't seen that 30% pullback that I talked about in the last video as something that happens often and frequently. And I hope some people took that literally and said, well, you said it's going to go down 30%. Yeah, I said it's possible and that it happens in the past, and that's what investing is about, looking at prior behavior of an asset and trying to be prepared for that. But at the same time, we did not remove or sell any of the position in any anticipation of that. The objective of highlighting that possibility was simply to prepare you in the event that we had a 30 or 40% decline, that it was normal in a bull market uptrend and that you don't want to lose your position, and that if anything, you want to add to your position on that possibility. But right now, we are in what I consider to be an outlier environment or outlier movement, meaning that we're seeing price action or behavior here that even by Bitcoin standards and its history of extreme volatility is not something we see that often at all. We saw a glimpse of this briefly here in 2019, obviously in 2017, and obviously in the cycle before that, the 4-year cycle with the double move here in 2013. There's only really been 4 like moves in its entire 10 or 11 years. So when you have an outlier move like this, when you have any asset class behaving in an outlier sort of situation, you need to take a step back and say to yourself, I have no control over what this is doing. I cannot predict what it's doing because we are in a situation right now where in 3 weeks' time, I think we can be up at $80,000, maybe even $90,000. And this would fit this mini sort of parabola structure very well. We could also comfortably drop right here, find the top and do a 35% decline into and down back towards just the 10-week moving average or even just the 20-week moving average. I mean, in prior bull markets, hitting the 20-week moving average was a very common occurrence. And as you can see, the separation now between the 20-week moving average and price is very pronounced, almost as pronounced as the top here in 2017. So on the flip side then, seeing a decline of 35, 40% is not out of the question. Again, it's not a prediction, it's a possibility. And the point of these videos is to be able to point out possibilities so you are prepared when those events occur. The whole goal of successful investing is to understand what could go wrong and not so much what could go right. We already know what could go right. We got in this space early on because we thought the opportunity was there that Bitcoin was going to 6 figures. That's been the plan from the beginning. We don't need to convince ourselves otherwise, but we also need to be prepared on the way up to that point on what could happen. And right here, a drop of 35, 40% will not destroy or alter the bullish nature of this advance off the March 2020 lows. A decline of 40% doesn't even get you to price from December the 20th. That's how bullish this move has been. That's how extreme this move has been. So to be prepared for that, you need to understand now, what would you do on a 40%, $15,000 price decline? What would you do if within the next 5 days that was to occur? Are you going to sell all your Bitcoin because you just sat here calculating all of the money you have made here now in this move, and that's stuck in your mind, that you think that open profit belongs to you? It doesn't belong to you. Obviously, if you think in BTC terms, like some of you do, and you only care about the nominal value of your BTC, then really these videos aren't for you, because you've already, you're all ahead of us. You already think that Bitcoin's the next reserve currency. You just want to hold Bitcoin. You don't care about the USD price. But for us who view this from a USD price, from a purchasing power price, you're looking at 40,000 in price and looking at the profit, and then all of a sudden in 5 days or 10 trading days, it's now almost cut in half. Excuse me. And so then you panic, and you start to really sort of kick yourself and punch yourself, thinking, why the hell didn't I get some profit there or do something? So you need to be prepared for that. And that's another reason why, and I'll cover this in a minute, why I sold a little bit at the $28,000 level, which is a pre-planned sale, because I wanted to just release some of that pressure that builds up, the pressure of the profit. I mean, it's a good position to be in such a huge profitable position. And but that comes with stress. It comes with a worry that you're going to lose it, because it's not realized yet. And because it's not realized, there is fear. And when the market so you have fear now with open profit. Think about that, fearing your profit, and then it drops 30 or 40%. How do you feel? So again, the purpose of these videos is to make you aware that it's a possibility. It's a real possibility based on Bitcoin's history, and you need to know that you shouldn't panic at that point. And if you think right now that you're going to panic and sell all of your Bitcoin, then maybe sell a little bit of it, a small amount, just to sort of reward yourself, pat yourself on the back and say, I made some money. Okay, so that's one idea here. But look, otherwise, what do I think is going on? Well, this move is now mostly unlike the 17 move. Now, we did have this really big surge from making an all-time high, dropping, and then we did surge quickly here. So this developed a decent separation from the 10 and 20 week moving average. And then when that finally topped, it declined by, I think it was almost 40%. And this is crude here, but yeah, you can see it's 40%, just around 40%. And that was normal, right? And you can see it was a V-shaped recovery. You had one wick down, and then one wick, an engulfing candle, and then it just kept going. So why not? Why not? Why can't we see yet again a 40% or 35% decline back to that 20-week moving average, and then a V-shaped? It's a possibility. Be prepared for it. That's what it would look like. But I'm starting, and maybe this is from a contrarian standpoint, what a bearish contrarian would want to hear, but I'm starting to think that we're in something, and I tweeted this out 2 weeks ago. This feels a lot like the silver move of 2011, and it also, to some extent, looks like the 2013 move in Bitcoin in its first big peak. If you look at this here, this is the move in 2013. Let me go back to the 4-year cycle on the monthly. And when I look at the candles here and look at the date range, that occurred here on month 2021. So almost at that midpoint of the cycle, just short of that. And this is that pump right there. This is the first big one that created a lot of separation on the monthly over a sort of a 4-month period. This to me, and you can see the nature of this, the structure of this, riding the upper weekly Bollinger Bands. This has a lot of the same characteristics and feeling of a lockout move that people just really can't believe is occurring. So it occurs without the blow off like speculation and frothiness. I mean, yes, people are excited on social media, but it's all the same characters. It's all the same people, mostly for the most part, that are excited and jumping up and down. It's confirmation of them sticking through the bear market. I see it on Twitter. I mean, the Twitter growth is not going through the roof. There isn't a whole lot of new retail participants from what I can see that's jumping in. I've got friends who are like, hey, yeah, I know you're into Bitcoin. You know, you're probably doing okay. But none of them are calling and saying, how do I get in, man? What's going on? What's going on? There's some of that, but it's nothing like what it was in 17. It's nothing like what it was in gold when I was doing a lot of that in 2011. My point is, it doesn't feel like it, like that mania final blow-off phase. And here we are, double the price from 2017. Here we are up $30,000 in the last 2 months alone. So my point is that this is an institutional driven play, even in the futures markets. I mean, the volume is in the spot exchanges. Funding rates just, they're not going to extremes. They get cleaned out every now and then, but this is a spot-driven rally. It's a physical-driven rally. It's money and capital that wants to own physical Bitcoin. It's not the speculative futures-driven markets that is driving the price right here. And it reminds me a lot of this because even though I wasn't not invested in Bitcoin in 2013, I was heavily into tech, and I know that this early period right here in 13 was really the first time that some of the Silicon Valley VCs and a lot of the tech folks, really, the money that got in drove this higher here the first time, and then it was reinforced the second time. So this here was the first. Before that, it was all just sort of hobbyists, techies, libertarians, all that sort of thing, right? This is a price at the $10 range and below. This is when you had the first sort of smart money that came into the market, and they just drove this higher relentlessly. And this went from $13 to $200. It was a 10x move. And then we had this lengthy consolidation over almost 6 months. And then we had that final blow off to the 1200 where there was definitely some more retail participation. I think something like this is going on again. And I alluded to that just 2 weeks ago in Twitter. Here we are now. I'm looking at the price about to clock $40,000. Congratulations, everybody. That's great. But going back to these charts, this is where I think we're at. And if that's the case, if you look at this closely, orderly candles above the Bollinger Bands, and then the rate of change really accelerates. And what you see here is that from this entire move of 2,000%, the majority of it, right, because it's a log chart, the majority of that move occurred here in the last 3 weeks or last 4 weeks. So even though if you're sitting here at $13 Bitcoin and all of a sudden, it's at 47, well, it's not too different to sitting here at, if you look at $13, add a few zeros to that and go to 13,000. And then you get to this sort of point right here, and it's at what, $48. So add a few more zeros again and it becomes 48,000, not too dissimilar to where we are. But then look at this peak right here at $257. Now add a few more zeros and then you get the idea. Now again, I'm not suggesting we're going to $257,000 over the next few weeks. Not at all. But what I am suggesting is that if this sort of parabolic move can remain sustainable even just for 4 more weeks, and you notice how orderly this is. Now you're starting to see it really poke above the weekly Bollinger Bands? What if you get 3 or 4 more of these massive candles? All of a sudden, by the end of January or mid-February, you're sitting at 100,000 Bitcoin. And there's your first real peak, much earlier than everybody expected. People have been talking about cycles going out to 2027 and 24 and lengthening and so on. And here we are shortening, if anything. There's a rush to Bitcoin. This is obvious. There is real capital flooding in, and this is just going crazy. So we could, while this move is sustained, it's going to keep increasing at this rate of change. It's very rare once something gets to this sort of escape velocity type action that it just pauses for any period of time. We had a couple of pauses already. I don't think this really pauses now until it tops. And when it tops for this move, it's going to decline 40%. I do believe that. But I don't know where that top comes. And if this rate of change continues, then like I said, we could be by mid-February or early February at the $100,000 level. And then we can put in a 40% drop back to 50, 60,000. I don't know at that point, right? That's the whole point of an outlier move. You don't know. All you can just say is, I don't know, but this is what could happen and I'm going to be ready for it. And this is what I want to say. So this is what we could be doing. And then we could be pausing or consolidating for a good portion of the 2021 period into the summer months. And then we continue and go up towards that top in the latter part of the year. And if we go back to the monthly chart here it is. And this would be the right translated October, November kind of peak. And you still get the same result where we're looking at sort of that peak in that $200,000 range, give or take a very, very wide margin. And it's difficult to say, but we're looking at something kind of like this now over the next month, right? And then we drop, consolidate, and then peak. Okay. Again, numbers are arbitrary. They're guides. They're not predictions. We're just trading this secular uptrend. Look, here it is, right? Well, are you going to be surprised with this? Look at the uptrend. It's what we've been talking about from the beginning. There it is like that. Is that a surprise to you? It's not a surprise to me. And this is what I've been invested in from the beginning. And this has been my goal and remains my goal to this date. I can't be any clearer than that. When we try and get too detailed in this analysis, you get analysis paralysis. You just start talking over and over. But this is very clear. Secular bull market, trust, capital inflows, institutional inflows, 4-year cycle. It's all pointing to me in the same direction. And being early to this 4-year cycle, there is no way in hell I'm going to miss out on it getting up to this level. So that's where we stand in the 4-year cycle. All right, so is this pump sustainable? I think I just answered that question. It is sustainable for the short term. The rate of change tells me that it's sustainable, but it will reach a peak, and when it does, it should fall back quickly. Next few questions, 2 of these combined. Why are you selling when Bitcoin will become the world's reserve currency? Why did you sell 5 BTC out of the model portfolio at 28,000 when you said it's going over 100,000? So some people are confused by this. Most are not. Most people get it. But I said I'm going to sell 5 BTC, which was only 15% of the model portfolio at 28K, when Bitcoin was at 5,000, when I was buying it at 4,000. That was my plan because it represented the initial outlay of the portfolio. So I said, when we get to 28, that is probably the worst case scenario from a risk management standpoint. I said to myself that if we were going to get a left translated cycle, that we would get to a new all-time high, probably do a 20% move above that and top. That was my absolute worst case scenario. And all I wanted to do was take out the absolute worst case scenario, put the initial outlay back in my pocket, and then be happy. That was the main reason for doing that. Also, another reason for doing that is, again, as I described, as price gets higher and you have a massive open profit in your position, it becomes difficult to hold. And by taking a little bit off the table at a pre-planned level, it feels rewarding. You feel as if you've accomplished something. You take some off the table, which basically means you're now risk-free, right? You're not riskless because you have open profit you can give up, but you can't walk away with losing money from this endeavor. So right now, I can't lose no matter what happens. Bitcoin would have to go to zero and I still wouldn't lose. And that's a powerful position for me personally to be in. And I feel good about where we stand there. So this one comes up all the time, and it's coupled with people telling me over and over again that we'll never see 30% corrections because the institutional play is too great. And I'm telling you, and I don't like to say in absolute terms, but I think you're definitely wrong. Now, this current move may not give us any 30% decline to 100 like I just showed, but it will top. And when it does top, it will correct 30%. And institutions won't rush in to buy, because what is happening, or what's going to happen, is we're going to get to a point where we're going to unlock certain levels in price that you're going to get long-term hodlers or miners, or even the folks, even the institutions that bought in at 18 or 20K, they're going to start to say, well, we just made 200 or 300% on our money. Let's sell some. Let's sell all. You just don't know. So what I'm getting at is you get to a certain point where you do unlock, there's some price discovery that occurs, you get some more supply unlocked, and you get less demand, because at some point in the short term, even institutional folks, they say, we wanted to buy, let's call it $100 million worth of Bitcoin, and they couldn't get approval, board approval, regulatory approval, whatever the case may be, and they wanted to buy at 20, and now it's sitting at 60. They're going to second guess. They're humans as well. They're going to start to say, well, do we want to buy now at 60? So what I'm getting at is demand begins to, at some point at least, be second guess and question, and supply begins to increase. So you will at some point have to find a level that forces profit taking, and that then ushers in a period of decline. So 30% corrections will come, but it may not come until we hit 100,000, and we may go straight up, or it may happen tomorrow. It may even happen by the time this video comes out. That's the important thing. I'm okay in giving you two absolutely extreme and opposing scenarios. To me, that is not any sign of weakness. That is, to me, respecting the market and saying that we're in this outlier situation, and both of those scenarios would not be surprising and should not be surprising to any investor that has done any real investing, given where we are today. So I would not be surprised either way, but we will get a 30% correction at some point. If we rally to above 65,000 over the next few weeks, so without a 30% decline, at that point I would be looking at possibly selling 5 BTC. And the reason for that is, yes, I do believe we're going up to 150,000 or 200 in this 4-year cycle, but just like the reason for selling my first 5 BTC, I think there is an outside chance that, and it's only an outside chance, that we are going to be going to a top here over the next 2 or 3 months, maybe around the $90,000 or $100,000 level, and then this 4-year cycle, for whatever reason, chops and chops and chops, and eventually finds a 4-year cycle low somewhere at the $20,000 level before going again. Unlikely, but hey, when you're in at 3,700, 3,800, and you can take possibly a little more off the table, I would. But again, it is dependent on this move continuing. If we get a 30% retracement, I would prefer that right now. I think that keeps the bull market more intact. It allows for some backfilling and some profit taking. And I think that allows for a more sustainable bull market that is more like the 2017 move. So here it is here. A pullback right now is more sustainable. And if we get a pullback, I would not have a price target under $100,000 for any Bitcoin. So I hope you understood that. The target is not, it's still discretionary. It's fluid. But I would, if this continues over the next 3 or 4 weeks, heading up to sort of 80, 75, 80,000, I would be looking to take 5 BTC off because there's a chance it's a final move. Unlikely, but there's a chance. I do want to see, however, more of that pullback. Here it is here, like we saw in 17, a 30% pullback. And if we get that, here's the next 4-year cycle due. What if it does what's called an extreme right translated cycle? What if it doesn't top until September or August of 2022? What if it just goes and goes and goes? And yeah, I'm talking crazy numbers, and I don't believe that's the case. But come on, who are we fooling here? Bitcoin, I mean, this has been a crazy experience, a crazy journey. There is nothing that really would surprise me. So as an insurance play almost, as I've protected myself on the downside, I need to, in this environment, protect myself from the upside and have 10 BTC. And you don't need more than 10, right? Because if we're talking about a situation where Bitcoin's going, say, straight to 1 million or even 2 million in this 4-year cycle, having 10 BTC, you're going to be just fine. Okay. And I don't mean 10 in a nominal sense, but it's 10 of your 30, or it's 1 of your 3, or it's 100 of your 300. So it's a ratio. It's basically keeping a third of what you have left in the wallet, hopefully on a multi-sig wallet, not on the custodian's wallet, in your control. So I'm keeping that 10 for the upside extreme possibility. Just like I sold 5 for the extreme worst case scenario, I'm keeping 10 for the extreme upside scenario. Okay, so that's going to be reflected in the model portfolio of the next few days going forward. Okay, this is already becoming a long video, so I want to start to pick up the pace a little bit here. Advice for those who sold at 20K and still on the sidelines, what's best for them? You know, I get this question. You wouldn't be surprised how often. I get this more than 2 to 3 times a day. I got this when I still am heavily involved in gold, but in the last gold bull market. I get this in every bull market. What do? I sold and now it's gone up a lot, and it's just, you're deer in headlights. You don't know what to do because you fear by buying now, you're buying the top. And you know what? There's a chance you will buy the top, especially Bitcoin at 40. But I was getting asked the question at 18,000. I was getting asked the question at 22, at 28, 32, 36. All these little levels, I was getting asked the same thing. And if you just had bought at that point, you'd be okay. Even now, I showed you a 40% decline is only to 23 or 24,000. You still would have been in the profit if you sold at 20 and got back in. So and this also pertains to, I'm not sure if the question was here. I actually grouped it with this, but a lot of people asked, I have friends and family, they want to get in, but what do I tell them? What do we do? Well, again, when the market's up 300% in 2 months, there's never an easy answer to this. But if Bitcoin's going to be, or if Bitcoin gets to 80 or 100,000 over the next month or so, should you have bought at 38,000? I think the answer is yes. If your goal is what I described, Bitcoin at 150 or 200 or 250, is it time to buy now? Would you buy now? If I told you Bitcoin's going to 200,000, but it may or may not go through a 30% decline before then, and what would you do? And I think the answer is you would buy, right? So my answer to everybody is get a core position you're happy with and comfortable with. Get something where you're in, you got a footing and a foundation in this space. but at the same time, do it knowingly, knowing that you will experience some volatility, and you could experience a drawdown of up to 40% in the bull market, but not to panic, and to realize that that was just the penalty you paid for either not listening, or for selling, or for not listening to your friend or your family when they said to buy. But you are focused on the 4-year cycle top. You are focused on $150,000 to $200,000 Bitcoin price, and that's the goal of the investment. And if you frame it like that, it shouldn't be all that difficult to do. How do you remain in position when profit drops for 30-40%? Well, I think that's what every video has been about, hasn't it? So go back and watch the videos. This is what it's been about. Understanding the volatility of Bitcoin, the nature of this market, how it can drop 30-40%. And if you think you can't handle it, take some off the table. I've said it before. It's better to take some now and see price double in the future than it is to not take any now, see a 30 or 40% decline, sell it all, and then it goes back up. That's worse. That's 1,000 times worse. So take a little bit off if you can't handle it, but otherwise mentally prepare yourself for that possibility. How do you identify when the bull market ends? I want to hold through the major corrections, but certainly not the bear market. Well, of course, this is going to be 1,000% discretionary feeling of the market. It's going to help, or we're going to need to see a blow-off-like environment to make it easier. I'm not saying it's easy, but it certainly is easy when you get the massive parabola peak move in a market. At least personally, I think I've gone through enough of them now to at least be able to identify them in real time and get up pretty close to the top. It's the ones that don't give you that full-blown blow-off that can be difficult. But I think there's a number of things we're going to focus on here. We're going to focus on time in the 4-year cycle. I'm not really prepared to entertain any top now until at least post-summer. And more likely towards the end of the year. And also price. I'm not really prepared to entertain a major top until we get into the 6-figure range for Bitcoin. How to prepare for a black swan on BTC, protecting yourself. Well, it's simple. Just don't put every single thing into this. I know some people have everything in this. Everything's riding on this, and it's make or break. And you know what? Kudos to you. I mean, if I was 22, I would probably do the same thing. I'm not 22. I'm in my late 40s. I've built and had a successful career, and it's been good for me. I'm in a position where I don't need to risk anymore. I've made what I need to make. This is fun. This is great, and of course, making some more is always welcomed. But I'm not going to risk everything I've done to make more than I need, because I don't need really much more. So for me personally, to answer this question, how do I prepare myself? Well, I don't risk enough where it's going to kill me. It's simple as that. And as you know from the model portfolio, I've already taken enough off where I don't even have any risk in this market anymore. I have trading risk. I have quite a bit in the trading account for Bitcoin, but it's the same thing. So point here is, if you've got something to lose, something you've built, don't risk everything on this. Certainly don't borrow for this. I know you feel it's a once-in-a-lifetime opportunity, and in some regards, it's obviously a huge opportunity, but don't go all in completely, and because it does inhibit your decision-making process, and that could end up hurting you. Otherwise, again, another strategy is just sell a little bit here and there. Be okay with selling a little bit, taking big profit off the table to allow the rest to grow, and that's important. And then what is a realistic level to add to a HODL position? Well, ideally, anything before the prior 4-year cycle highs. I always said I'm not going to add a single dime to Bitcoin above 20,000. I think people who are adding above 20,000 really need to understand that they've made some pretty significant investment mistakes. Now, I'm not talking about people that are just getting into this. If you're just being introduced to Bitcoin, of course, you didn't know, right? But I'm talking about the people, if you were in Bitcoin or if you've been following it and Bitcoin was at 4,000, 6,000, 10,000, and now you want to add more, The only excuse for that would be that you have earning new money and you want to put that to work. That's fine. I'm talking about if you're sitting there idle with accounts and now you're like, should I put some more in? That to me is not something that sits well with me from an investor standpoint. I wanted to put my allocation in early, and I did, and I don't think there is any realistic level now unless you're dollar cost averaging. You've come across some new money you want to put to work. Those are the situations where I think it's reasonable. But at some point, the asymmetrical opportunity, at least for this 4-year cycle, begins to dwindle, meaning there's more downside risk and there's less of the upside that it was. When Bitcoin was at 5,000, the upside was massive, the downside was small. Now it's not the same equation. It's still skewed to the positive, but it's not the same equation at all. So I hope this video, like all the prior videos, have been helpful. This, again, is from a disclaimer standpoint, my experience, my journey, my thoughts, the way I'm approaching it, the way I'm trading this, the way I'm investing this. If it helps you, that's great. That's what they're there for. I didn't ask for anything in return, and I won't in the future. Again, thanks for being here. Thanks for following. I appreciate you. I want to wish you, again, happy 2021. All the best to you. Thanks again. Take care.